Welcome to Web3 Unpacked. I'm your host, Rich Pasqua, founder and CEO of ARC. Each week we unpack the Web3 revolution. Join us as we discover and explore the people, projects, and visionaries building the trusted web. Good afternoon, everyone. This is Rich Pasqua, CEO of ARC, a digital transformation company, and we have Matt Sky joining us as well.
Hey there. Thank you. And this week what we're doing is taking some of the headlines, some of the major news we've been observing. We're going to give some of our takes on that, do a little bit of our own unpacking of maybe the headlines beneath the headlines, and there's no shortage of topics to talk about. Let's start with this one, Vitalik Buterin's recent comments about Facebook or Meta, I guess now Meta. And he was saying it's far too early to know what people actually want. So anything Facebook creates now will misfire. That does not sound like the kind of thing Mark Zuckerberg would want to hear given the immense investments they're making in Web3. What's your take with that, Rich? Are they jumping the gun on investments? They're putting billions into it. They're revising their entire business model. This is a pretty significant shift for the company.
Yeah, it is an interesting topic here. And I think what we need to do is really find out what Vitalik means by misfire, right?
Right.
And there's a lot of people that may not share Mark Zuckerberg's vision of the metaverse, but personally, I applaud him for doing this and pushing, Web3, metaverse, blockchain technology forward. It's a wide open space with massive financial possibilities and potential. But is it too early to kind of dump massive amounts of money and resources towards it? And that's really the uber question here, right? So sometimes being too early is the same as being wrong, right? And if we look at big tech companies, for example, Apple, they will wait until innovation and technology catches up and marketplaces are starting to be developed and they see potential in a space, and that's when they push forward, and that's when they create their software and hardware products to enter that particular market, no matter what it is.
And I guess I was just going to say, the question is, do you think in this case, is Facebook, ironically, the MySpace this time? Are they jumping the gun too soon and then others will come in and do a better job? Or are they the Amazon, where these investments, even though no one else sees them as valid at this point, they're truly looking down the pipeline and seeing what's next and making those heavy investments?
Well, I think there's many facets to this, but if we just unpack a few, it all comes down to business decisions, right? Facebook's, membership and onboarding is kind of waning. I think Mark himself understands that Facebook, the platform, or Meta now, but Facebook, for argument's sake, is waning a bit. And he needs to think to the future, and he's hitting the gas. But how much money do you put into an environment that is radically changing by the second and is actually being built right now? Are they, the MySpace, or could they become the MySpace of the metaverse? Who knows? Frankly, I think it's because the metaverse is kind of predicated on and built around like gaming platforms. Mark has and Facebook has an uphill climb to build environments and gaming environments that will support the metaverse, or what we think of the metaverse. Personally, I think the metaverse is not one platform. I don't think one person or organization will own the metaverse. And I think the name Meta put people up in arms because, people might think that Mark is trying to co-opt the dialogue or the narrative and the name. Is it a smart name? Yeah, I mean, there's nothing wrong with the name, but um, from there, I think truly the metaverse, if you understand how it's going to be put together, it's less about, hey, we have this giant playground to wander around in and play and interact and literally have virtual offices and whatever you want to do. And it's more about, certainly you need to have those, but it's more about the connective tissue between platforms, right? So when you have
Hmm.
your digital wallets or whatever you have in Web3, even now you have digital assets. You have game skins and characters and items you've purchased in game. And that's truly the moneymaker for a lot of these platforms. But now, to me, the metaverse is being able to wander between Xbox and desktop gaming platforms and PlayStation and Meta's world and anything that Microsoft puts out. That to me, that's truly what the metaverse is about. I mean, if you think of it as like a mall, there's several stores, and the stores equal platforms or gaming platforms or
Right,
any kind
right.
of platforms, and you have the choice to go anywhere you want. As I'm walking through the mall, which I would consider the connected tissues between the stores and or these platforms, you have the choice. You have a wallet, you have a handbag, whatever you're carrying around. You have a backpack full of whatever you need and like, um, and you get to make choices within those stores or those platforms. So to me, it's about the connected tissue.
Are people should we assume that what Mark Zuckerberg wants to create is a closed garden, though? I mean, it kind of seems that way. I think people feel it's that way, but in theory, what they're developing, it could be cross-platform, right? You could jump to Microsoft's platform, you could jump to various different virtual worlds, and then just jump back into Meta's world. Or do you think that what they're really trying to do is own this space in a way that we're the big players and forget everybody else, thus kind of killing the whole decentralization Web3 in by almost by definition?
Yeah, it's extremely interesting in the fact that I have slightly different views. Right now, and large organizations, whether it's you can consider the government, Apple, Microsoft, all these organizations, um, they grew so big, and they are kind of their own planets to themselves, right? To me, and if you look, and there's some interesting articles actually you and I were sharing this morning, Matt, on the idea of the Web3 development community is poised to eclipse every other development community.
Yeah.
We see it. We work with engineers and developers on protocols. We see it growing, and we see how the dynamics are different. It's very open source. It's very not, oh, I shouldn't say open source, but it is a community where developers can jump into multiple projects and work for themselves and get paid in crypto,
Although
which they
open,
all
maybe not
really like.
completely open source, but people they seem very willing to hand off a white paper and to show what they want to create to everyone, almost by necessity, which is a little different than development of the past when you think about it.
Absolutely. So when I look at this and I'm, saying, okay, to your question, are they trying to control these environments? I think the nature of what they've been doing for many, many years is just that:
Yeah.
control the environments, control the economics, control your information, and ultimately, sometimes controlling narratives, which we've seen recently, right? Right or wrong. Um, but to me, I think there is a mental shift, right? There's a chasm to jump, even in the developer community, right? And that chasm to jump is the idea that you don't really, in the future, you're not, as a developer, you're probably not going to work for one company. You may work on projects.
Hmm.
And and yes, this is what, the big companies know, right? And it is kind of a walled garden. You only get to see what they release and whatnot. Um, but I think larger companies are going to have to adopt this type of philosophy of just kind of an open environment. And ultimately, that is the baseline for Web3, right? And it's the idea that we, the users, we, the developers, we, the designers, whoever we are, ultimately the control is put back into our hands. And I think that's one thing that's missing from large organizations. Or maybe they're thinking about it behind the scenes, but I will tell you there is a huge groundswell, and people will start to work way differently and make money doing what they love on their own time very differently than they do now.
Well, whatever they are developing, I certainly would commend Mark Zuckerberg and Meta for calling it. And I just want to read this quote because I think this is interesting, just to show the scale of what Mark Zuckerberg sees. This was in a July 27th earnings call. He says, given some of the product and business constraints we face now, I feel even more strongly now that developing these platforms will unlock hundreds of billions of dollars, if not trillions, over time. This is obviously a very expensive undertaking over the next several years, but as the metaverse becomes more important in every part of how we live, from our social platforms and entertainment to work and education and e-commerce, I'm confident we're going to be glad that we played an important role in building this. So this is not like a little side project for them. This is a mantra, basically.
Yeah, and there's nothing wrong with that. I mean, look, even at ARC, we're taking the bull by the horns. We're putting a stake in the ground, and working with really interesting companies and doing what we do best, which is, you know, design, branding, user experience, and platform builds as needed. But yeah, I mean, it's a big stake to put in the ground. Getting back to the original sentiment of our discussion, how much do you put into it, right? And there are lots of facets to it. Yeah, so you have to watch the developer community. You have to watch the investment community. You have to, watch your burn, right? What's making you money? You can't, you have to keep those lines of business open continuously, keep fostering and nurturing those business lines. But also, you can take a giant leap, but as I was mentioning earlier, things are still being built out. And, if the past year hasn't taught us anything, it's that, the industry ebbs and flows. It goes up and down. And I'm not just talking about the market. I'm talking about technology. I'm talking about protocol level technology. Things are changing. Lessons are learned. So you have to all take this all in consideration. And it's happening not month by month, but, day by day, and sometimes quicker. So yeah, there's a lot of facets to look at.
So
And also one other point, to the metaverse itself, you know, um, personally, and this is not financial advice to Mark Zuckerberg or Meta in any sense. Let's be clear. But I might, I look at Microsoft, right? And, you know, like them or not or whatever, lots of respect there. They do a lot of great stuff. I use all their products. Um, they, for many years, I think they understood where things were going because they followed the game community and game developer community. Not only did they follow them, they purchased companies like Activision, Blizzard, major studios. They created Xbox studios and certainly Mahjong, which was a very expensive purchase, but brilliant. So they're collecting. They have over 20 gaming companies, right? what they understood early on is that, not, don't build a monolith and have people come to it. Absorb a lot of the big players in the field, uh, and create environments that potentially could interact with one another. So when we get back to what I was saying before, the connected tissue of the metaverse, to me, Microsoft is poised to really take a interesting position in the metaverse,
Well, they certainly have.
or dominate.
Well, I mean, they certainly have all the pieces, and they did it stealthily, right? So they've been building this gaming empire. But then when you think Microsoft, you think productivity. When you think front-facing Microsoft beyond Xbox, you think Office, you think all the major OS updates, and that you don't think of cool. But then they have these two components. So you're right; they almost have all the building blocks. All they need to do is connect them now.
Right. And again, being, the idea of being sometimes being too early, I think, either they had a crystal ball and they knew what was going on. I think they were just smart about understanding the gaming community, and the pieces will fall in line, I think, quicker and more easily from Microsoft than other organizations who may, like Apple, they probably own studios as well, but it's mainly casual. But Microsoft really put their heads into the idea of, buying and cultivating immersive gaming environments. And then they have the HoloLens, which, is maybe not there just yet. It's impressive, really impressive. It's not there yet. And, back to some of our conversations over this past week, personally, again, with business decisions, I personally think that, the purchase of Oculus was great, and I think
those are great headsets. They seem, and with Project Cambria, they seem like they're only going to get a lot better coming up.
Absolutely, and I like Oculus, and I think they make great products, and I think it was a smart move. But ultimately, we're going to find the hardware technology becoming cheaper and lighter and smaller and more malleable to people's everyday lives. And, keyword cheaper, because you do need to have adoption. And that's where a lot of innovation needs to happen. But how much of your eggs do you put in that basket from a business perspective, right? How much money? I mean, Oculus doesn't make really any money, I don't think, but I'm pretty sure they're a loss leader here. And it's more of like, how can we innovate in the hardware space as well? But I think you're going to see a lot of companies, small to large, start to produce very cheap headsets, and that may push certain players out of the arena, if you will.
What do you think happens when Apple gets in? Because every time Apple gets in, the game changes, I feel like.
Yeah, I mean, personally, I would love to see Apple get into the crypto blockchain space in general. Why do I say that? Because, they own the majority of mobile users, them and Samsung. And, with the advent of the Saga phone from Solana, there's a little fire being lit underneath them, and I think they're observing the industry a lot closer now. When they get involved, and why I want them to get involved, I want everyone involved, obviously, but I think Apple's an important player because their phones are in the majority of the world's hands.
Yeah.
And that is the great opener. It's, if they do one thing well, Apple, through industrial design and technology and software, they make their products like appliances. It's a toaster. It's easy to use. If they could do that and figure it out and get onboard people and start, having people have wallets.
An Apple crypto wallet. Wow. Yeah.
Yeah. And you can store your NFTs and data and information in there. If they adopt the whole idea of Web3, which would be amazing, I think the onboarding to this universe will be pretty smooth and profound.
I wonder if the people at Apple, when they see Web3, when they see like what we were talking about recently, the Solana saga, if they see this as a threat or if they're thinking, okay, we do need to adapt. Or maybe they're waiting, I guess, waiting to see if there's success on that end before making a change. Because obviously things like the App Store and keeping people within the Apple ecosystem is a very fundamental part of Apple. And Web3 kind of blows apart a lot of the idea that any one platform is where you stay.
I think this topic is really, really important, and it goes kind of deeper than this conversation actually, and maybe we should unpack it. But the walled garden that Apple has put together, they don't play well with others, and that's for business reasons, and that's their choice, obviously.
It's worked well from a profit standpoint.
Well, exactly, but I think what we're seeing, especially with the developer communities and some of the applications that are being built now and platforms that are being built and operating systems, let's not leave that out, that are being built out now, are predicated on democracy, a very democratic, way of approaching their communities. And it is open, and the people and the developer, the audiences and the developer communities now have a voice, and they partake in building these applications. Now, how does Apple perceive that? And if they continue with their walled garden within Web3, meaning you have to, adhere to certain guidelines, which is fine, or you have to build with a specific SDK, and they will only port over specific applications and not others, that could put a bad taste in people's mouths, right? So, in the early days of the App Store, they had to speak to and cater to and work with developers to create that environment. But now the whole developer community the mindset is changing. So it'll be interesting to see how they handle the idea, the philosophy of Web3.
And just to your point, and this could be a whole separate conversation, so maybe not for us to go too in depth on it, but as we release power from corporations to the people, which I think most of us would agree is a good thing, are there any concerns we should bear in mind? Tyranny of the majority, making sure that when we're making those choices, that we're making the right choices. Do we trust ourselves enough? And is it going to be a safe environment without those corporate regulated guardrails in place anymore? Because this is about to be a completely new internet, I think. I don't know if people understand the scale of it sometimes.
Absolutely. It's massive. It's a groundswell that some people just don't see. But as far as, the people and, having more control over things, being involved in this space for so many years, I have come to the conclusion, I started with like, hey, it's all for the people, and, freedom of choice. And certainly I stick by that. And I stick by all the ideology of blockchain in general, right? It's supposed to pull people higher and give them more control. With that said, there always needs to be some kind of governance models put in place, whether that's done at the development level or within the communities. I do believe you need some kind of guardrails and regulations put in place, especially within the finance end of things, or DeFi. If you don't, then you get that's when you'll get corruption, and people will take advantage of systems. But from a community standpoint, I think that's yet to be defined. And I think people, with the advent of DAOs, which is probably a whole other podcast for us, the idea of these decentralized organizations, that are autonomous, that's like mind blowing, where, you have a small group of people that maybe have started the organization, they have majority rule perhaps, but then the whole rest of the community takes stake, takes ownership or equity within that environment because they're participants, and that gives them a voice. How much of a voice do you have? How many guardrails do you put up, or what regulations do you put into place, or community rules? That's to be defined. And I think, that's actually happening right now. People are
Mhm.
learning lessons behind the scenes. And they're learning lessons. So we'll see. The jury's out.
No, it is exciting to think how much perhaps the people themselves could own the future development of companies in a way that we haven't before. That it's not maybe as walled off in terms of only the top investors. But I think that kind of segues us perfectly into our next story that we're going to look at, which is continued investment in Web3. Right now we're allegedly in a crypto winter, as they say. I don't know exactly the dynamics of the winter. Is it early winter, late winter? Is it just fall? But VC fund Variant has raised $450 million, doubles down on Web3 in this current environment. And this is a story I found from Fortune magazine by Taylor Locke. And so just to kind of give you the recap, founders Jesse Walden and Lee Jin raised $450 million for a third fund that will focus on the, quote, user-owned web. This will consist of a $150 million seed fund and a $300 million opportunity fund to double down on existing projects across Web3, the blockchain-based decentralized iteration of the internet. So, they've already invested in Uniswap, Mirror Foundation, Magic Eden, Polygon, others. And the quote that stands out to me is Web 2 was digital feudalism and Web 3 is digital capitalism. That's an interesting line.
I love that line. I think it's a great quote. And we'll have to borrow that from time to time for sure. Yeah, it goes to what we were talking about before, is putting the power back into truly creating a capitalism within Web3. That's giving control, financial control, and choice back to the people. Whereas Web2 is feudalism. Whether you subscribe or agree with that term, it is a controlled environment. You're interacting with, centralized organizations, whereas Web3 is decentralized, giving more control over your own destiny, or digital destiny, if you will.
And I think this is the one time where capitalism may get less of a bad rap with this generation. It seems
Yeah,
like,
maybe.
yeah, it's not a popular term lately. But I think in this context, you're right. We're looking at it as freedom from a certain degree of control and giving actual power to the individual. Here's something I keep wondering, and I think this is the question everyone's looking at as we move toward true decentralization. What are the models going to be for making money for these VCs that are putting in these hundreds of millions of dollars? I think conventionally we think of internet companies as having data ownership, data over us as a major piece of the puzzle. If that's less the case, if privacy is becoming more something that people demand, and if ownership by the individual is becoming the environment, how are these VCs going to make revenue? What are the different ways if you're looking at getting into this space?
Well, I think from an investment standpoint, VCs, because we're part of this world at ARC, River Capital Holdings is our parent company. We're around this environment every single day. We understand, why someone would want to be, investing in a protocol or an app or, a Solana, if you will, something really big, because they're, these companies, they're poised to be the next Apples, the next Microsofts, the next telcos, if you will, and they want to be first in line. Even small investments, if things pan out, turn into mega investments, like ground changing kind of investments. With that said, you have to, just like everything else, it's no different than investing in, well, it is slightly different, but it's like investing in a company, a regular company that you'd want to make money on, Netflix or Tesla. You constantly are looking at, the potential returns. The difference here is it's a much, it's risk versus reward. It's higher risk with astronomical reward potentials in the future. So they're betting on some, some big players, which we consider big players or unknown to the general, populace, if you will. But they are big players, and they're pumping lots of money into it. But there is, and to the winter, the crypto winter, everything, we see it. Everything is being thought through with more detail now from an investment standpoint. Whether you're helping to incubate a project or, inject venture capital into it, people are putting more thought into it. So for example, and this is a true case story with one of our clients, they, would say, Rich, we would present an investor deck. They'd read through the white paper and we'd give them a 20-minute demo. And, 5 minutes later, we've got $500,000 or $1 million or $2 million investment or a grant instantly. Now it takes a couple of weeks. So people are lifting the hood. They're contemplating. They're doing more homework and digging deeper to make sure that these platforms and applications are ready, are legit.
Seems like
and have true value.
Yeah, again, I think we've talked about it. It's exactly the same exuberance you saw in the 90s when everybody invested. You just said .com, and immediately you suddenly had tens of millions sitting in your pocket. And now people are saying, "Wait a second, where are you moving? What's your actual protocol? What's your actual mission statement?" And maybe it's premature, but where's the profit, right? I mean, I think that's the question as well. Show me the money. So yeah, I think there's a lot there. The money. Certainly, kind of our third, I think, major update or major piece of news that everyone's talking about again is Ethereum. Right, we're getting closer and closer to the merge or the flippening. These are big events potentially for Ethereum. It's been reported by Fortune again that Ether Open options flipped Bitcoin options for the first time on popular exchange Deribit. I think I'm saying that right. I hope I'm saying that right. And that, quote, the Ethereum proof of work to proof of stake merge narrative is pulling the whole market to the upside right now, according to Daniel Keller, co-founder of blockchain network Flux. I don't think, on this show we talk so much about price go up, price go down, but nevertheless, there is something very significant happening if the second largest cryptocurrency, Ethereum, is transitioning from proof of work to proof of stake. What are the implications of that? Because that's going to change not only all of the other coins, Solana, Avalanche, Polkadot, all the other ones, but it's going to potentially change the entire crypto landscape dramatically.
Yeah, it's definitely a fascinating topic, and the entry to play here for proof of stake, if we just start this way, is 32 ETH, which roughly equates to currently $53,000.
They had to take advantage of that $800 dip.
That's a lot of money for people to
that
start
was your
to dip
chance.
their toes into things. Yeah, exactly. Right. So the barrier to play here now is it's kind of high, and not many people have 32 ETH. Many do, but a lot of them don't. The majority don't. And I think the conversation is starting to bubble up and form around the idea of, hey, a decentralized platform could potentially be heading towards a centralized platform or centralized um, platform. And that scares people because it messes with, the whole idea of being open, transparent, and being able to partake in a lot of these interesting programs. Now, you know, we can look at it that way, but it's going to be harder for people to kind of play, average people to play in this kind of playground, if you will, or the proof of stake playground, if you will. And it holds a lot of people back from actually making decent money. It's the way people are making money these days on different networks. So it's not, people just don't think it's going to be fair, and that the majority of the earning potential and the community will go to a few rather than all.
I mean, it seems like, yeah, even in proof of work, while there are obviously these large funded corporate mining operations, you still had the opportunity to bootstrap and mine yourself. The individual could still find a way, maybe get some friends together or some weird solar panel setup or do something. But it seems like if you really move to this model where it's just owning the actual token at this point is the only way to earn more, it seems like you're creating an extreme problem for concentration of wealth. I don't know if that would, not that we're doing price predictions here, and no financial advice, obviously, but I don't know if that even is helpful to Ethereum in general. But of course, I guess there's the underlying development, nevertheless. But
yeah, and Matt, it recently, I think over the past week, you've started to see major miners actually selling off their
well, they want to go
Bitcoin.
back to Ethereum Classic, right? I think I've been
Right.
hearing that ETC's been up.
Yeah, so there's different scenarios here, because what's happening is, as the price, so it's easy to say, hey, jump in and get a few friends and start a mining pool. I've done that. I've built my own rigs, and the reason why there was no reason for me to tear down my rig. The sole reason was because when you put it in a spreadsheet and you do the math, your cost of energy, depending on where you are, I happen to be in New York, expensive, doesn't match the earnings and the hash rates you're getting on your mining rig. So I was forced to tear it down. You're going to start to see that with a lot of people, and the miners who are going to do quite well in this environment are the ones who have slightly off the grid type of mining setups that can produce energy through sun or hydrodynamics or whatever it may be to produce really, really, really cheap energy. Those are the winners right now. If you're plugging, mining rigs into a wall, it's going to be pretty costly.
Is a proof of stake Ethereum a big win environmentally?
Well, I think with the advent of 2.0 and everything else like that, it is going to be quite more efficient. And when you think about it in the grand scheme of things, the blockchain and the carbon footprint, and are NFTs bad? Are they ruining the environment? Well, it's no different than any other network. All of these centralized systems run on huge databases and warehouses of hard drives and computers. It's very similar. It's just distributed, and it's people are still wrapping their heads around it. And I don't know how to put an actual price on it, but I don't think it's it's doing more damage than anything else in this world. And frankly, the whole next gen Ethereum platform will be hyper fast. I mean, that's what they needed to be competitive. They are already one of the biggest platforms or exchange, blockchain tools to build applications on. It's one of the most popular ones. Now it's just going to get better and better and better, faster and faster, more efficient. More efficiency equals, I would imagine, lower energy, and lower energy equals, lower carbon footprint, if you will.
And even faster with additional layers built on the protocol, right? I mean, when you get
Absolutely,
so you're
yeah,
talking in the type of speed that I think people have dreamed about with blockchain is actually coming to fruition. And what's interesting, I think, is that remember that moment where NFTs were horrific. No one wanted to touch it with a 10-foot pole because of the environmental thing. But then just yesterday, you sent me that link of Tiffany's and CryptoPunks building these little CryptoPunk jewelry. Like suddenly now it's cool again. It's such a interest. It really, the sentiment changes pretty rapidly in this space.
yeah. I had way back last year. I think I had a conversation with a good friend of mine who is pretty prolific in the art world and has smashed it, absolutely killed it in the NFT space. And he and other founders and other platform developers, NFT platform developers, have had these really interesting conversations with between themselves and the community around, is this really sustainable? Are NFTs sustainable? And his argument was, you know, I can print a giant, 6 foot by 10 foot piece with a printer with ink that uses electricity and plastic and oil and everything else that goes with it, then package it up in cardboard and tape and foam, then put it on a truck that uses gas, oil, petroleum and oil, and spills stuff out into the world. So is that, it's not apples to oranges, but you have to look at it in a slightly different way. And people are, like they are with physical goods, getting attached to their digital assets. And that's okay. If that's what you like, that's good. Some digital assets, like the Tiffany's, which I think is so cool and fun.
I love it. I love the
like
design to that. Yeah, that little 8-bit.
Yeah, it's beautiful. They did such a good job, Matt. And that opens up a whole marketing thing, and it's a really clever, what I would call brand dating, if you will. Two brands getting together and doing something very unique. Even if it's attached to a physical good, it's still it's still not as disastrous as people think.
Yeah, and I think that's true. We forget, especially in this era where we order everything online, the amount of packaging, the amount of our carbon footprint, the amount it takes to receive everything. And like you're saying, if you're going to have art mailed to you or any kind of product, if you're substituting and starting to take digital products, that probably, I would assume, is a bit of a less of an impact to the environment and everything else.
Correct. Absolutely agree.
So I think we always kind of do this as we reach the end of our episodes, and I always found this to be useful, I think, to listeners. If we were to do just a quick recap, Rich, let's say we're just saying like 2 or 3 major takeaways from everything we've covered here with Facebook, with new venture in the space, and with Ethereum. What would you say that should be? What should people walk away with, if only 2 to 3 things?
Yeah, I think, as far as the metaverse goes, and this is not a message to Meta or Mark Zuckerberg or Apple or Microsoft or anything else. It's just observe what's going on below the surface, which I truly believe they are. Obviously, the whole marketplace and the developer communities are rapidly changing, and I think that change will actually affect the way we everyone works, and what we expect, or our expectations of work will be different in 10 years. Understand that. Understand that the metaverse is not going to be. I believe that the metaverse will not be built by one mega company or several mega companies. Will they help propel that environment, the metaverse? Absolutely. They're the first in line. They're the ones dumping tons of resources and money into it. But just understand that it's not one person. It is communities that will build this. And it's interesting. I would say keep your eye on Microsoft in that world, for sure. When it comes to investing, I'll say it again. Whether you're a venture capital firm or a personal investor, lift the hood, understand what you're getting into, and understand the runway for those particular products that you're interested in and or partnering with. And then, with the Ethereum merge, I think maybe we'll start to see as soon as it happens, because everyone wants to see it happen. Obviously, the proof of stake end of things. I think it's a digital environment, and I think this ultimately is up to Vitalik and his team to say, all right, maybe 32 ETH is maybe not a fair playing ground. Maybe we dip it a little bit. I think maybe we need to. That's just getting started, and it's not even released yet. But I think that'll take time to kind of shake out and see how that proof of stake works.
I guess that's the thing. The communal component, the rules can change. It doesn't have to be set in stone, right?
Absolutely, yeah. It's a digital environment, and we can play with the rules. But again, I think the community will have a very loud, and they have a very loud voice in this particular item.
Well, everybody, I think that's a good note for us to wrap up on. You've been listening to Web3 Unpacked. I'm Matt Sky, and this is Rich Pasqua as well.
Thank you, everyone. Great conversation.
And of course, everyone, continue the conversation on our Discord. We'll provide links to that. And you can always find us also on arctai.com. Have a great rest of your day, whatever it is that you're doing.